Hello, everybody. This is Fernando, your local real estate expert in Las Vegas, Nevada.
Hello, everyone. This is Nick with Paramount Residential Mortgages, your local lender in Las Vegas, Nevada.
We're here at the open house at the beautiful 9541 Summer Suite Court, and we're going to be talking a little bit about money.
Yeah, Fernando. Actually, it's a very hot topic because right now a lot of people are afraid to put the first step, and the main reason is the money and the interest rates.
Right.
So here I break down some numbers for all of us, so that way we're trying to help as much as possible people in those tough markets.
That's right. You know, one of the things that a lot of people mention to me when they come into an open house is they have concerns about the interest rates. A lot of times they hear things on the news that maybe paint a picture that makes them think that they should wait for the quote right time. So when is the right time? And I'm sure these are some things that you as a lender get these questions a lot too, I'm sure.
Yes, absolutely. Well, to my experience and to my knowledge, I think there is no exactly right time. The very right time is today, because you don't know what is going to be the market 1 year from now, 3 years from now, 5 years from now. The interest might drop, most likely not. We already been on the bottom of the interest rates, 3%, 3-4 years ago. So here it's my vision how we can help you buying or making the first step, buying your dream home.
That's right. And Nick has put together something really impressive for this particular property. This property, 9541 Summer Suite Court, is currently listed for $715,000. And so, why don't you tell us a little bit about the numbers that you've crunched, Nick, so that people can get a good idea about not only the reality of what the monthly payments are going to be and how the interest rates play with that, but also what is the benefits to seller concessions. That's another hot topic that I know when I represent buyers, we're always going to be looking for ways to help the buyer as much as possible.
Absolutely.
Right? Whether that is negotiating a lower price, or alternatively to that, what we could do is negotiate for seller concessions. And what is seller concessions? Well, essentially what that is the seller is going to give back some type of money to the buyer.
Yes.
Upon an agreed contract. So we're saying we're going to purchase this home for X amount of money on the condition that the seller is going to give the buyer something back, whether that is to cover a real estate agent's commission, or whether it's to cover closing costs.
Absolutely.
But here's the key, and this is a really important part. You could also be asking to cover buying down the interest rate.
Absolutely.
And what you figured out by running the numbers is that might be the most beneficial way.
I think, and I believe that that's the most, exactly how you said, that's the most beneficial way, because paying part of the closing cost, it's only one-time benefit. But buying the interest rates, buying down the interest rates, it's benefits for the life of the loan.
Right.
It's not only for 1 year, it's for 30 years. And you're gonna see how the numbers go projectedly, and those numbers are pretty impressive.
What we're seeing here is that, let's say that you're asking for a lower price. Okay, great. The seller agrees. Okay, we're gonna lower it from $715,000, we're gonna lower it to 3% less. $693,000 and a half.
Yeah.
Great. What's the difference in the monthly payment at the end of the day?
Well, here, when you take under consideration those price reduction of 3%, of course, the down payment, instead of $35,750, is going to be $34,678.
Okay.
Good.
Yeah.
Good. Not bad. Here, about the monthly payment, the difference between $6,235 of option 1 and the 3% price reduction, the total monthly payment is going to be $6,049, which it's a good difference of $186 a month.
That's not bad.
A lot of people like that.
Yeah. So just by having part of the negotiations being agreeing for a lower sales price, you're going to pay a slightly lower down payment, of course, and you're going to be paying about $180 less per month. That's not bad.
Absolutely, it's not bad. But let's go deep down and see where those seller price reduction, where they can have the most impact.
Right.
Where the buyer gonna get a lot more benefit.
Correct.
So this is option 3. It's 3% seller buy down. Instead of reducing the price, the seller can keep the price of $715,000 for the property. This with 5% down payment is going to be again $35,750. But with those 3%, if they go to buy down the interest rate approximately can go down to 6%, 5.99, which the APR approximately can go down to 6.37%, which is huge difference on today's market. Let's break down the numbers about total monthly payment. So here, the total monthly payment is going to be $5,784, which if we compare with option 2, where the seller have to reduce the price by 3%, the difference is $265. But the most interesting thing is, if we compare option 3 with option 1, here it's a huge difference. It's $451 every month. You're saving $451 for the life of the loan. It's not just 3% to about the asking price. I think that's the most impact where the seller buy down can go.
Yeah, because at the end of the day, we're asking the seller to give the same amount.
It's the same amount for the seller.
The seller sees no difference.
Absolutely.
3%.
That's it.
A good realtor should be able to negotiate for that 3%.
I believe so.
But now, for the buyer, you're getting that 3%. You have options of what to do with it. What we're suggesting is that taking that 3% and putting it into buying down the interest rate is the most leverage you can put into it.
Absolutely.
Especially in the long run. And I saw the calculations that you put together of what that would look like in a 7-year period. And it's astonishing what difference that 400 and some odd dollars can make per month. It's every month.
It's every month.
Again, the seller is already, they're happy.
Yeah, they're happy. They sold the house.
Right.
Everybody's
They sold the house. They've moved on. But now the buyer has to pay the mortgage every month.
Yes.
So what does that look like on the long run?
Okay, in this case, with option 3, where 3% going to buy the interest rate, here on the monthly payment, $1,024 will go through the principal. $3,044 will go to the interest. Here, of course, HOA, PMI, and home insurance are $602. And taxes here is going to be approximately $1,114. But look at the difference between option 2 and option 3, where on option 2 we got 3% price reduction. In option 2, $875 will go to the principal, and $3,508 will go to the interest.
Right.
Do you see the impact?
Yes.
It's a lot. Well, here HOA PMI is going to be approximately the same, but the interest.
Right. Yeah, because even though the price was lowered, and a lot of people get fixated on that purchase price because that's all they're seeing.
That's all this.
Because that's the most surface level number. right? People want to say, well, I bought the house for this much. And not a lot of people would say, but my interest rate is this much. They want to be hyper-focused on the purchase price. And you can see where, yeah, certain things will be a little bit better, right? Maybe the taxes are going to be a little bit lower.
Okay.
Okay. The home insurance might be a tiny, tiny bit lower.
$5 to $10.
Sure. But at the end of the day, buying down the interest is going to have by far the biggest impact.
Yes.
If you're having that lower mortgage payment where every month you're paying potentially $200 to $400 less,
Yes.
what can you do with an extra $200 to $400 in your pocket every month?
Well, you can do whatever you want.
Exactly. But not give it to a bank.
Yep.
Now let's talk about the lowest cost loan snapshot. Again, a 7-year snapshot. What can you tell us about that?
Well, here we can see the difference again in the long run. I'm talking about the next 7 years. It depends which option, seller buy down or price reduction, both of them by 3%. Here, I want to highlight the interest. For the next 7 years, by choosing 3% price reduction, the buyer is going to pay $309,000 in interest only. If the buyer choose option number 3, he's gonna pay $271,000, which approximately is $40,000 different. $40,000 different.
So in 7 years, they're going to see a savings of $40,000 by choosing to buy down the interest.
Yes.
Versus chasing the lower purchase price.
Versus chasing the lower purchase price. Yeah.
Interesting.
Yeah.
And that's something that a lot of people don't think about.
Well, I wish back in the days when I bought my house, I wish somebody to explain this to me. And right now, after so many years, I can calculate how much money I've lost.
Right.
Well, my point of doing all of this is to help as much as possible people.
Right.
And I think a lot of people are going to like the numbers.
Yeah. And once you're actually in your home, one way or the other, whether you chose to put the 3% into a lower purchase price or whether you chose what we believe is a better option of putting the 3% towards buying down your interest rate, you're still in your home. It's your home. Well, now you're gaining what? You're gaining appreciation.
Yeah, here I did a little bit graphic, approximately what's going to be estimated home value appreciation of your property. Well, here on this slide, I did estimate home value appreciation 10 years from now. What's going to be approximately the value of the property?
Right.
Based on historical compound appreciation.
Got it. And what is, historically speaking, what is that percentage? Is that a percentage per year?
Yes, it's a percentage per year, and historically it's 4.35% a year.
4.35.
So can you imagine the power of compounding?
Right. Because this is 4.35 compounded every year.
Every year. And this 10 years from now, the value of this property is going to be 1 million, almost 1.1 million.
That's right. Now, does that sound reasonable to expect in 10 years this house will be somewhere around $1.1 million?
Plus, and you can calculate how much money you're going to save from the interest that you're not going to pay because
you bought down the interest rate.
You bought down the interest.
So it's a win-win.
It's a win-win situation.
Yeah. The seller's happy. The seller sold their home. They gave 3%. Hey, that's okay. They sold their home.
Yep.
But the buyer choosing to buy down their interest rate, now, again, using leverage, you're going to have a lower monthly payment. And at the same time that you're living in your home, it's only going to go up in value.
Yes.
It's going to appreciate over time.
Yes.
Will the buyer still be here 10 years from now when the house is $1.1 million? Perhaps.
Perhaps.
There's a good chance they will.
Yes.
It's a beautiful house in a beautiful part of town, so why wouldn't they?
Absolutely.
And at that point, they can either sell it for a very nice profit, they can take out the equity and invest it into something. At that point, whatever they want to do.
Absolutely. And like you can see here on the graphic, the number. So the difference between 715,000 and almost 1.1 million, it's $380,000.
That's right.
How about that?
And so if you like what you hear and you think you're ready to purchase your home, Nick, what is the very first thing that somebody should do?
Well, the very first step is just simple. Give me a call for, I would say, 10, 15 minutes conversation. So that way I can see what is your goal. So we can start from there and see how can I help you. And my phone number is 702-782-5933. And just ask.
We hope you have enjoyed the video and found it informative. And don't forget, if you're ready to buy or sell in Las Vegas, contact me, Fernando, your local real estate expert, at 702-588-3385.